Welcome to your ultimate pit stop, Piston Pundit, where we don't just cover vehicle updates, we break down the gears of global finance when they start affecting the whole engine. In April 2025, the economic pistons fired into overdrive when U.S. Treasury Secretary Scott Bessent pulled the plug on $78 billion in pending loans to China. This wasn't a policy tweak. It was a full-blown detonation in the world of international finance. As Washington tightens the economic bolts on Beijing, China isn't just idling, it's counter-steering with its own high-torque maneuvers. What started as a financial recalibration is fast turning into an all-out race between two supercharged economies, with Wall Street, global markets, and your 401k strapped in the back seat. Let's torque into the three major turns shaping this high-speed standoff. A $78 billion blowout in the banking lane. When Bessent ordered a top-tier global bank to cancel all China-linked loans, it was like slamming the brakes on $78 billion worth of momentum. These weren't just random investments, they were deeply embedded in US dollar infrastructure and debt ecosystems. The sudden shutdown sent shockwaves through Wall Street, foreign exchanges, and investor confidence alike. The move came during a broader tariff revival under Trump, and just weeks after China quietly topped up its U.S. Treasury holdings by $18 billion. To many analysts, this wasn't just policy, it was economic warfare. Washington's attempt to isolate Beijing financially could end up denting its own credibility. If the U.S. is seen as weaponizing financial access, it might push allies and rivals alike to seek alternative fueling stations. Bessent defended the move, stating, "If we let China siphon off global capital while targeting U.S. industries, we're subsidizing our own decline." But critics argue that unleashing this level of financial torque without stabilizers could send the global engine into a spin. And if Wall Street's confidence falters, it's not just China that might get whiplash. But this wasn't just about China. It exposed cracks in America's own financial suspension system. America's worn brake pads, fiscal weak points exposed. Bold maneuvers like Bessent's look gutsy, until you check the U.S. balance sheet and realize the rot beneath the surface. In February, Trump's $9 trillion tax reform promised economic boost, but Moody's says it's more like an overboosted engine running on borrowed pistons. They project annual deficits climbing by $2.3 trillion, with debt to GDP cruising past 140% by 2028. Bond markets are already overheating. The 10-year Treasury yield touched 4.5%, and mortgage rates are grinding past 8%. Housing in cities like Phoenix and Atlanta has stalled. Fitch Ratings even slapped a negative watch on U.S. debt. In plain speak, investors are questioning whether the U.S. can keep paying its bills without blowing the gasket, and global players aren't waiting around. Japan just dumped $68 billion in U.S. bonds. Saudi Arabia trimmed $45 billion. In just 2 months, foreign central banks offloaded a staggering $250 billion in treasuries. That's not a market correction, it's a trust issue. By flexing its financial muscle abroad, Washington might be loosening the bolts at home. Trust is the suspension system of U.S. fiscal dominance, a Barclays strategist warned. Once it bottoms out, there's no smooth ride ahead. As trust wavers, China isn't sitting idle. It's firing on all cylinders. Before we downshift into China's bold counterpunch, hit that like and subscribe button to stay in gear with every twist and turn from the global auto and economic world. Your support fuels the Piston Pundit engine. Let's keep this ride going. China's engineered retaliation. Beijing didn't stall, it re-engineered. First came the upgraded digital yuan bonds. With yields at 5.8%, they're now outpacing U.S. treasuries. That's a siren call for yield-hungry investors, and sovereign wealth funds from the Gulf and ASEAN are buying in like it's Black Friday. Then came the turbocharged twist, Chinese dollar bonds. These are dollar-denominated but governed by Chinese law, offering dollar exposure without U.S. legal reach. $127 billion has already been sold, creating a detour around Washington's control lanes. At the same time, China's building bilateral pipelines, with $120 billion in loan deals signed with Brazil, Saudi Arabia, and Indonesia. These aren't just trade links. They're forming an entire alternative economy fueled by yuan. And yes, Beijing is fast-tracking its own payment system to rival SWIFT. While not yet mainstream, it's already catching on in countries under Western sanctions, or those just tired of Washington's toll booths. This isn't just de-dollarization. As HSBC's Mary-Therese Barton put it, it's re-dollarization, on China's terms. In this emerging financial freeway, the US dollar is welcome, but no longer required. But China didn't stop with finance. It popped the hood on raw material dominance and squeezed hard. China's rare earths response hits the supply chain where it hurts. As Washington squeezed Beijing's access to credit, China didn't just respond, it retaliated with surgical precision. In March 2025, it placed strict export controls on gallium, germanium, and antimony, rare earth elements essential for semiconductors, EV batteries, and defense tech. These weren't random minerals, they were pressure points. Suddenly, US chip makers and military suppliers were left scrambling. Prices spiked. Gallium shot up over 200% almost overnight. And while the Biden administration launched Project Stride to boost domestic rare earth production, the reality is sobering. Nearly 90% of refined rare earths still come from China, and alternatives remain years away. Meanwhile, Beijing hinted at tightening graphite exports too, a key ingredient in lithium-ion batteries. Japan started stockpiling. The EU accelerated its Critical Raw Materials Act. Everyone's bracing. The message was clear. China doesn't just participate in supply chains, it owns the choke points. And when it flexes, the ripple effects hit everything from F-35 jets to electric hatchbacks. One analyst summed it up perfectly. You can print money, but you can't print lithium. And China is making sure the West feels that difference. Meanwhile, China's long play is gaining speed, one transaction at a time. Beijing's currency play shifts global gears. While the US flexes its regulatory muscle, China is playing the long game, one yuan-denominated transaction at a time. In the first quarter of 2025, the yuan overtook the dollar as China's top currency for cross-border transactions. Its share in global SWIFT payments nearly doubled since 2022. But this isn't just about numbers, it's about narrative. And Beijing is reshaping the story. Saudi oil priced in yuan, Brazilian soybeans settled in yuan, Indonesian nickel, same thing. Major European banks, BNP Paribas, HSBC, Deutsche Bank, underwrote over $40 billion in yuan bonds in just one quarter. Even as Europe aligns diplomatically with Washington, the financial winds are shifting. And then there's the digital yuan, integrated with WeChat and Alipay, offering fast, low-cost cross-border payments. For countries frustrated with US compliance rules and SWIFT fees, it's a lifeline. As Mohammed El-Arian aptly said, reserve currencies don't collapse, they get replaced, quietly, deal by deal. China's not asking the world to abandon the dollar, it's just offering a compelling alternative. Verdict: this isn't a skirmish, it's a system overhaul. What began with Besant's abrupt $78 billion loan cancellation now looks more like the ignition point of a full-scale economic rewire. The US is doubling down on leverage, financial, regulatory, and military. China? It's building an ecosystem, from rare earths to reserve currency alternatives. This is no longer just about tariffs or interest rates. It's about trust, resilience, and control over the tools that move the global economy: capital, commodities, and code. So let's shift the conversation to you. Was Besant's move to cancel loans a brilliant strategic play or a reckless gamble? Can China's rare earth leverage and yuan push truly disrupt the dollar's dominance? Or is it overhyped? How should global industries, especially EVs and tech, navigate this new financial terrain? Drop your thoughts in the comments. We want to hear your insights, stories, and takes from every corner of the world. And don't forget to subscribe to Piston Pundit, your ultimate pit stop for vehicle updates and economic shifts that drive the auto world. Thanks for watching. Stay sharp, stay tuned, and always check your mirrors. You can now check out any of the videos on the screen. There's plenty more to explore.